Good evening, ladies and gentlemen, and welcome to Indigo's conference call to discuss the first quarter of fiscal year 2024 financial results. My name is Aman, and I'll be your coordinator. At this time, the participants are in listen-only mode. A question and answer session will follow today's management discussion. As a reminder, today's conference call is being recorded. I would now like to turn the call over to your moderator, Ms. Richa Chabra, from the Investor Relations team of Indigo. Thank you, and over to you.
Good evening, everyone, and thank you for joining us for our first quarter of fiscal year 2024 earnings call. We have with us our Chief Executive Officer, Peter Elbers, our Chief Financial Officer, Gaurav Negi, and Head of Investor Relations, Kailash Rana, with us to discuss the financial performance and are available for the Q&A session. Please note that today's discussion may contain certain statements on our business or financials which may be construed as forward-looking. Our actual results may be materially different from these forward-looking statements. The information provided on this call is as of today's date, and we undertake no obligation to update the information subsequently. We will upload the transcript of prepared remarks by day end. The transcript of the Q&A session will be uploaded subsequently. With this, let me hand over the call to Peter Elbers.
Thank you so much, Richa. Good evening, ladies and gentlemen, and thank you so much for joining this call. Today, we announce our financial results for the first quarter of fiscal year 2024. And before I speak about the first quarter, I'd like to mention about the last financial year. The year, if you would recall, that we had a distinct period of two halves. The first half was negatively impacted by the high prices of fuel and the depreciation of the rupee that led at that first half of last year of a total loss of 26.5 billion rupees. The second half of that year, owing to the stabilization in external variables and the initiatives set in motion towards operational improvement, enabled us to report a net profit of 23.4 billion rupees in that second half. That very positive momentum from the last two quarters has also continued in this quarter as we started the new year on a very strong note and reported the highest ever quarterly revenue of 171.6 billion rupees and the highest ever quarterly net profit of 30.9 billion rupees, a good 3,000 crores, which is the third consecutive quarterly profit, and we're back in the black for third quarters in a row now. This series of strong financial performance can be attributed to our clear and focused strategy of reassure, develop, and create, backed by our very strong operational performance. At the very heart of this performance are our loyal customers that choose to fly with us and our 6E colleagues ensuring synchronization of many operational factors together to serve our customers. It's the power of we, the unwavering dedication to service excellence and focus on customer centricity that has paved the way for such an exceptional performance. I would like to thank our customers and congratulate all our employees for starting the year with such a positive results. During the quarter, a record number of 26.2 million customers choose to fly with us, an impressive 30% jump compared to the first quarter of last year, FY23. I would also like to share that in May of this year, May 23, we reached a milestone of flying 3 lakh passengers on a single day. And it gives us great pride and excitement to make flying accessible to more and more Indians every day, and thereby giving wings to the nation by connecting people and aspirations. Now I would like to update you also on one of the key highlights of the quarter. On June 19th, we set another truly momentous and very exciting step in the journey of Indigo, as we placed a sizable firm order for an impressive 500 aircraft in the Airbus 320 family. This 500 aircraft order is not only Indigo's largest order ever, but also the largest ever single aircraft order placed by any airline with Airbus. This order speaks to the growth and the future of Indian aviation, where we are proud to play a pivotal role. Further, last month I had the privilege to be part of a prestigious Indian CEO delegation in Paris alongside the leadership of the country. It was a moment of pride for us when the historic order of 500 aircraft was widely commemorated at this forum. We already had previous orders totaling around 480 aircraft, which are yet to be delivered between today and the end of this decade. With this additional order of 500 aircraft, our outstanding order book has now almost 1,000 aircraft yet to be delivered till the middle of the next decade. These 1,000 aircraft will help Indigo to move forward and to make sure that we live up to our promise and continue to build our unparalleled network, both domestic and international. We're well positioned not only to expand and densify our unparalleled network, but also to execute our role in fulfilling our mission of boosting economic growth, social cohesion, and above all, mobility in India with affordable air connectivity, on-time and hassle-free service across our country and globe. This large order will help us in further expansion of air travel in the country and will also help in generating and supporting direct and indirect employment. And we feel privileged at Indigo to be able to contribute to the growth of the Indian aviation market and economy. Operationally, despite a myriad of complexities, intricacies related to the operations at such a large scale, we remained to be among the global leaders as we operated an average OTP of 89% and a very low cancellation rate of 0.3 during the June quarter. We're also pleased that our efforts to make Indigo a globally known brand is being recognized, as we have been recently ranked the world's top 50 most valuable airline brands by Brand Finance. With this recognition, we have maintained our distinction as the only Indian airline consistently featured in the airline's top 50 for 3 consecutive years. On the network side, we continue to densify by adding new routes and frequencies to enhance connectivity in the country. And in fact, and just think about that number for a second, and in fact we have added almost 200 routes in the last 3 years, which is more than 60% increase in the number of routes, today totaling over 500 individual routes. Further, in line with our objective towards unparalleled connectivity, we're adding our 79th domestic destination, Shivamogga, this month. This will be our 6th destination in the state of Karnataka. It will provide enhanced connectivity to central and coastal region of Karnataka and will further improve accessibility to popular tourist destinations. During the quarter, we further bolstered our international network with the launch of new codeshare destinations as far as the United States of America. We now offer codeshare flights to New York, Boston, Chicago, and Washington. And these new connections mark an important milestone with Indigo's entry into the new continent, reinforcing our commitment to enhancing international connectivity from India. We're also leveraging on the massive opportunity in the 5 to 6 hour flying radius from India, and we have recently announced 6 new destinations across Asia and Africa. In the coming few days, literally, we are starting operations to Nairobi, Jakarta, Tbilisi, and Baku. Further, in the coming weeks, we'll start also operations to Tashkent and Almaty. Addition of these new destinations will help to offer an array of super exciting opportunities for our customers to travel worldwide on Indigo. Looking ahead, while Gaurav will speak on the capacity guidance for the second quarter of fiscal year 2024, for the full year we remain confident in achieving our previous guidance of the north of mid-teens growth. With the highest ever passengers welcomed in Q1, we are well on track to reach our target this year of 100 million customers. This will obviously be a very big moment for India and Indigo. The long-term economic growth trajectory of the country matches our ambition to double in size and scale by the end of the decade. On the 4th of August 2006, Indigo embarked on this journey with a vision to offer quality, on-time travel experience to our customers at affordable fares. As we turn 17, the day after tomorrow, and looking back at this journey, we can only feel very privileged and humbled with the support and faith that we have received from our customers that have enabled us to grow to one of the largest airlines in the world. At the same time, I almost now complete 1 year in India, and with our vibrant organization. Amongst many other things, personally, I've always admired the cultural diversity and hospitality. I had the privilege traveling to a number of cities across the length and breadth of India, and like to express my gratitude for the people for the warm and very supportive environment rendered to me. While visiting the various stations, I had the opportunity to witness the teamwork and the enormous dedication of our Indigo stars, which is a key element in the success of our strategy towards new heights and across new frontiers. And with that, ladies and gentlemen, thank you for your attention, and let me now hand over the call to Gaurav to discuss more in depth the financial performance. Thank you.
Thank you, Peter. Good evening, everyone. For the quarter ended June 2023, 50.9 billion rupees, with a profit margin of 18.5% compared to a net loss of 10.6 billion rupees for the quarter ended June 2022. As Peter mentioned, this is the highest ever quarterly profit for Indigo. We reported an EBITDA of 52.1 billion rupees with an EBITDA margin of around 31.2% compared to an EBITDA of 7.2 billion rupees for the quarter ended June 2022. This improvement is primarily attributable to increased scale of operations and efficiencies, further supported by lower fuel cost and favorable foreign currency movement at quarter end. For the quarter ended June 2023, the total revenue increased by around 32% on a year-over-year basis. Our unit revenue came in at 5.12 rupees, which is around 9% higher compared to the quarter ended June 2022. While the yields came in stronger than expected and remained flattish compared to the quarter ended June 2022, the load factor increased by 9 points, leading to this growth in the unit revenues. On the cost side, the fuel CASK reduced by around 26.6%, primarily due to reduction in average fuel prices. Further, the rupee closed slightly stronger at the quarter end, leading to a forex gain of around 1.2 billion rupees. Excluding the impact of forex and fuel, the CASK ex-fuel, ex-forex has increased by around 9% compared to the first quarter of fiscal year 2023, primarily driven by annual contractual escalation and inflationary cost pressures, increased costs resulting from engine-related supply chain challenges that we have, depreciation in rupee leading to an increase in dollar-denominated cost in rupee terms, and the investments for growth in various initiatives, including digital transformation, infrastructure enhancements, and our investments in talent and human capital. Due to our strong operational and financial performance, our liquidity has further improved as we ended the June quarter with a free cash of 156.9 billion rupees. This translates to an increase of 35 billion rupees as compared to the March quarter end. Further, we ended the quarter with a capitalized operating lease liability of 430.9 billion rupees and a total debt, including the capitalized operating lease liability of 462.9 billion rupees. Further, we added 12 net additions to the fleet during the quarter, and our right to use assets at the quarter end were at 282 billion rupees. Another development is on the engine side, where we have received some information from the OEM regarding the probable manufacturing anomalies in certain series of engine. This issue will require removal of these engines for a detailed inspection across all airlines globally. We understand these activities will be undertaken in a phased manner, impacting a handful of our engines in the first phase. We are working with the OEMs to assess and minimize any potential impact on our fleet. Now moving to the seasonally weaker second quarter, we are expecting to add around 25% capacity in Q2 of fiscal year 24 as compared to Q2 of fiscal year 23, which translates to around 6% capacity growth as compared to Q1 of fiscal year 2024. Further, as compared to the second quarter of last financial year, we are experiencing some improvement in load factors coupled with a downward pressure on yields. Since our inception, we have made significant strides in establishing ourselves as a global leader in the aviation market. We are incredibly excited about the possibilities and potential that lie ahead. Our pending order book of around 1,000 aircraft allows us to leverage the growth potential presented to us by an unprecedented aviation market. In order to develop people, process, and technology and create the next phase of our growth, we are investing in digital infrastructure, human capital, and loyalty program to meet the requirements of our future scale of operations. Apart from this, given our strong liquidity positions, we are also planning to invest in some aircraft and related assets. Further, subject to regulatory approvals, we are also planning on launching a venture capital arm to invest in early-stage companies operating in aviation and consumer-focused and allied sectors such as travel, lifestyle, hospitality, and transportation. Given our large consumer base and growth plans, we believe that these investments will help us add value to the airline. As we embark on our next chapter of our journey, we remain fully confident in our ability to achieve operational excellence on an even greater scale and size. With this, let me hand it back to Richa.
Thank you, Peter and Gaurav. To answer as many questions as possible, I would like to request that each participant limit themselves to one question and one brief follow-up question if needed. And with that, we are ready for the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Binay Singh from Morgan Stanley. Please go ahead.
Hi team, congratulations for this set of numbers. I have broadly two questions. First is when you look at Q2 yields, we do understand it's usually a weak quarter.
Binay, your voice is not very clear. Muffled. Sorry to interrupt. Can you please adjust the mic?
Yeah, I hope this is better. So my first question was on the yield side. Typically we see that the Q2 is seasonally weak, so yields drop by around 10% or so. But this time around we've also seen crude prices rise. So in that context, how are you looking at yields adjusting for crude prices and weak seasonality? The second question is when we look at the cost items, we've seen staff as percentage of ASKM and airport charges as percentage of ASKM sequentially jump. Does this reflect the annual increments that you talked about, or should we see more inflation in these cost items? So these are the two questions. Thanks.
Benny, on the first part of the question, we are seeing a deeper cut as far as yields are concerned. Traditionally, what we've seen a shift from Q1 to Q2 has been in the range of high single digits to early double digits. This time around, we are seeing a larger kind of a dip as far as yields are concerned. Like I mentioned, we are trying to hold at least the load factors are coming in still better, and as a result, there's a deeper cut on the yields, but the load factors are going to be slightly better than what we've experienced in the past.
And with respect to your second...
What do you think is driving that yield? What do you think is driving that? Because now Indigo is almost 60% of the market. So this is the strongest the business has ever been. So is it demand is slowing down? Like what are the drivers for that?
It's a combination of the fact that we again had a very strong Q1, similar to what we had seen in last year also. And plus, because of seasonality, some of the festivities that were planned, which had happened in Q2 last year, had shifted into Q1 also. Example, Eid had moved into Q1. As a result, you do not have the festivities in Q2. So as a result, there's a bigger dip that we have in Q2.
No. Okay, team. Noted.
And your second question on the staff and the salary cost part, we have indeed restored the salaries. I told you earlier we had 3 consecutive quarters of positive results, and with the results we have also restored the salary cuts. We did that at the end of last year, and we are comparing now to the quarter of the year before, and indeed the annual increments are included as well.
Any other cost line item where you see inflationary pressures in the coming quarters, maybe due to this engine issue or anything else on the cost side, ex of fuel that you would like to call out?
The large part of the costs that have already come into this particular quarter, in terms of unit costs I'm talking about, there will obviously be commensurate to the growth that we have. In terms of unit costs, I think one of the areas that we are closely monitoring are going to be airport-related charges that we have, as well as maintenance, like you pointed out. But aside from that, a large part of the unit cost is already in the Q1 numbers.
Okay, perfect. Thanks for that, team.
Thank you. The next question is from the line of Venkatesh Balasubramaniam from Axis Capital. Please go ahead.
Yeah, just one very simple question. Can you delve a little bit deeper in terms of the new Pratt & Whitney problem where there are impurities in the engine, in the core metal which has been used? How many engines of Indigo have been impacted, and consequently, how many aircraft have been impacted? Does this in any way impact your ASK growth guidance of 17 to 18% for the current year? And secondly, you did mention that the second question is, you did mention that yields have gone down much more. And is it like gone down 15% so far, or is it like 20%?
I think with respect to the Pratt engine issue, this is a new issue indeed, which is highlighted by the OEM. Here we have to rely on the communication which was shared last week by Pratt & Whitney about certain probable manufacturing anomalies, which are leading actually to additional inspections. The activity will be undertaken in a phased manner, as per some of the media reports. The initial phase, which has a global number, has still a very limited number for Indigo. I would say a net number of a single-digit number of engines in that very first phase. We don't know yet what is going to be the precise impact for the phase thereafter. Of course, we are in clear contact and clear coordination with Pratt to see what's going to be the precise impact, but I would not prefer to speculate on any precise numbers thereafter. The fact that Gaurav just mentioned the capacity guidance for Q1, and in my introduction I've repeated the capacity guidance in the north of mid-teens for the entire year. And of course we are working both with the OEM to assess what is the exact impact for the stage thereafter, and we're also checking on possible mitigating measures like actually we have done with prior issues.
Yeah, regarding the drop in yields, is it more like 15%, 20%, 12%? What is the kind of level of drop in it, QOQ, so far?
Again, so far it's in the teens that we are seeing. Just with 1 month of data, we are seeing the drop is in the teens right now.
Okay. Thank you very much. All the very best.
Thank you.
Thank you. The next question is from the line of Deepak Krishnan from Macquarie. Please go ahead.
Thank you for the opportunity. I just wanted to understand in terms of the older engine, P&W engine issues, where are we in that, and how does the current issue impact? Do we completely need to ground aircraft, or is it like you would get equivalent replacement engines and that shouldn't be a problem?
Thank you for your question. Actually, without repeating my question to the previous one, we have an existing situation with a number of aircraft which are impacted by the supply chain challenges. That issue was in the high 30s. I would actually label it now as around 40. The impact of the first phase I just mentioned, that's a single-digit number of engines. So that does not dramatically change the picture we have so far. Neither does it lead to an adjustment of our capacity guidance, and we're in close contact with Pratt to evaluate what's going to be the possible impact for the stage thereafter. And there's still a lot of questions on our side. What is the precise duration and the phasing of the inspections to be taking place? And here we have to await further detailing and information from Pratt and Whitney itself.
Yeah, sure. Thanks for the reply. I just one follow-up in terms of deploying capital towards aircraft related acquisitions. Could you highlight a bit more as to what is the strategy there and what are we particularly looking at?
So again, like we mentioned, the extent of our free cash flow has been increasing. There have been questions also in the past related to this topic. One of the avenues of deployment of this capital we are looking at is related to acquisition of aircrafts and related equipment for aircrafts. It could be engines, it could be the smaller aircrafts like the ATR. So that's the thought that is evolving here. More information will follow once we kind of close out any acquisitions in that space of assets. But that's the evolving thought process related to deployment of capital from our side.
Sure. Thanks, Gaurav, and best of luck for future quarters.
Thank you.
Thank you. The next question is from the line of Kripa Shankar from Avendus Spark. Please go ahead.
Good evening, and thank you for the opportunity. Just wanted to check on the capacity addition. Have you firmed up on what would be the XLR?
Shankar, may I request you to use the handset? The voice is crackling.
Yeah, is this better?
Yes.
Right. Yeah, thank you for the opportunity. Just wanted to check on, first on the fleet addition side, have you firmed up on what would be the XLR capacity which will be added over the next 5 years? And how would the international growth look like in your overall mix, at least in FY24 and perhaps over the next 4 or 5 years?
We have thanks for your question. We have a flexible basis when it comes to the XLR, so we have the opportunity to go up to a significant number of XLRs. We have not finalized the precise numbers. We still have time to do so. As we shared with you before, we clearly have the ambition to let the share of international business grow. Already we are taking significant steps. We prefer actually to just do the things rather than only to talk about things. Therefore, these 6 new international destinations, which are going to be announced actually which are going to be started, they have been announced, which is going to be start the operations as from this very Saturday when the first flight from Mumbai to Nairobi will take place. And thereafter the other 5 will be added. That will bring our share of international ASKs by the end of this year towards the range of 30%, which is an increase from the low 20s where we were earlier, and we continue to build on that numbers. We're not fixating any sort of long-term number where we should go, but we keep adding it to a number significantly higher than what it is today. And I think we have demonstrated at Indigo that we have a very high agility when it comes to our network planning and operations. And again, this step taking in the next few weeks is basically moving it from a number starting with a 2 towards a number starting with a 3 by the end of this year.
Thank you for that. My second question is on continuation to the previous comment made on the previous conference call. Are you still seeing, a high proportion of less than 15-day booking window in the seasonally weak second quarter as well, given that, you are seeing a relatively better load factor? So can you please throw some light on that?
No, you're right. Actually, we continue to see the booking patterns are more closer in, even in Q2, what we experienced in Q1. So that trend continues for us, a lot closer in than what it used to be probably pre-pandemic, when there was a more spread out kind of a booking pattern and booking curves that we had seen.
Kripa Shankar, request you to join the queue for any follow-ups. Thank you. The next question is from the line of Pramod Kumar from UBS. Please go ahead.
Yeah, thanks a lot for the opportunity. My first question is pertaining to the other operating income. There has been a reasonable deceleration quarter on quarter here, despite better revenue. So just wanted to understand what is driving that.
On the other revenue side, it's largely driven by VGF related, because it's largely driven by the VGF gap funding that we get. Along with that, we are getting some credits which have been considered in the current year, in the current quarter, I would say.
Okay, and also I note that the ancillary revenue run rate has kind of not been that or strong as what we've seen on the passenger revenue side. Any particular thoughts there, or is it something which is expected to remain or grow behind the curve as compared to the passenger revenue run rate?
Yeah, we've seen some softness, but we're looking into that because related to some baggage as well as fees revisions that we've carried out related to our convenience fees. there's been some moderation that we are seeing. We hope that this will start yielding, may not necessarily on the ancillary side, but will come into the tax revenue side. So it's a trade-off that we are playing between ancillary versus the tax revenue in terms of pull-in of new customers into our tax volumes.
Okay. And the last one question is on the VC arm, what you talked about. If you can just help us understand what are you briefly touched upon the areas which you're going to be looking at. If you can just help us understand more about the kind of corpus you're looking at or the investment threshold, what you're looking at here, and by what any timelines, what you have in mind by when you want certain invest to be done, any broader thoughts there, if you can share, please.
Again, a little bit of an early day kind of a look because we are going in for regulatory approvals. What we've loaded also on the stock exchange, we are going to be establishing an LLP. The objective have been stated. We will look at investing to begin with 7 crores, but this is just to establish the entity. There is more to come on this. There's internal discussions happening, and as there's going to be maturity of decision, we'll come back to you. But this is a directional view we wanted to share with all of you, that we are getting into a venture capital arm side where we will be making early stage investments in various companies which are going to be adjacent to the aviation business and our business, which will again help grow those businesses which are in that particular space as well as benefit Indigo. But more to come on this. And we haven't kind of narrowed down in terms of how much capital we want to allocate towards this. 7 crores is just the starting point for us.
And thanks for adding Shimoga to the route. Thanks a lot.
Sure. Thank you.
Thank you. The next question is from the line of Achal Kumar from HSBC. Please go ahead.
Hi. Thanks for taking my question. First of all, on the engine side, I know the visibility is limited, but any communication from Pratt, would Pratt be able to give you some spare engines at the time when you are removing those engines and sending it for testing, or you have to grind? You won't have any option but to ground the aircrafts.
Well, thank you for your question. Rest assured that already before this recent announcement of Pratt, we have a very intensive and open communication line with Pratt on the availability of spare engines and to make sure that we can continue to operate our fleet in the best possible way. And again, I think it speaks to the capacity and the agility at Indigo that so far we have been able, despite the fact that we have the present number of planes on the ground, we have been able to operate according to our capacity guidance by a whole range of mitigating measures such as extension of leases, and even the 2 wide bodies we have on operation between India and Istanbul are helping in that context to make sure that we live up to our capacity guidance.
Right. My next question is about the loyalty program. Could you please elaborate how are you strengthening your loyalty program? Is it like the similar ones which European LCCs are offering? Giving some discount to them on additional services, including on-board sales, ticket, seat selection, and all. Or are you investing in, or are you thinking about having a more broader and more strong loyalty program? Could you please give us a bit of a color on your plans towards loyalty programs?
Yeah, well, we can give that color at the moment when we announce the details of our loyalty program, which is clearly not today. What we have shared, and we're actively working on that, is that we will further enhance our loyalty program. We'll update all of you at the appropriate time on that. Clearly, with the traffic coming back, and again here, the first quarter, 26.2 million customers for the entire year will be, we're well on track to achieve our objective of 100 million customers flying at Indigo. I think that's a formidable basis to start further exploring that loyalty program. How it precisely will look, again, we'll share that with you in due time. I think Indigo has a history of 17 years of crafting its own path and its own structure and its own choices. So for sure we look what other LCCs or even some of the network carriers are doing, and basis on that we'll draft our own plans and our own structure, which are actually fitting the Indigo customer bases. And the fact that we have such a unique basis of 100 million customers here operating to all these destinations. So bear with us, give us a bit of time, and we share with all of you what's the outcome of it.
Thanks, Peter. I'll come back in the queue.
Thank you. The next question is from the line of Prateek Kumar from Jefferies. Please go ahead.
Hi, good evening, sir. My first question is firstly, how did the redistribution of slots given up by Go First happen during May? And how do you think if Go First resumes operations, how do you see the redistribution happening again?
Yeah. Well, clearly there was this suspension of the operation created a sudden disruption of operations and flight, and a sudden reduction of capacity. Many airlines, including Indigo, have been able to scale up some capacity and basically support all customers who still wanted to fly on these routes. So we have been able, in coordination with the airports, to have a sort of temporary access to some of the slots. How it precisely will play out in the weeks and if not months ahead, time will tell. I guess we have the same access to information as you when it comes to resumption of the operation and possible sizing of that. So we're awaiting that, and again here I think the collective airlines have been able to, Indigo with also the other airlines, have been able to temporarily backfill some of that capacity, but clearly no one had the ability to immediately jump in and immediately have all the same capacity on the same routes.
Thank you. And second question, how do you see the recent events around tail strikes for Indigo in past 6 months? As per press reports, DGCA was investigating the same. Can you elaborate something on this?
Yeah, no, the safety, of course, is an incredible important topic for Indigo. Indigo is a very safe airline with a very strong safety record for many years already. Safety is not something you do for just a point in time, but you keep on doing that going forward. Of course, it keeps our number 1, number 2, and number 3 priority. It will remain there. All the tail strikes are either investigated or under investigation, and don't think on those which are under investigation we should jump to conclusions here. We're investigating them with all the parties involved. We've received the DGCA notice on this, and we're now evaluating that DGCA notice and taking our options and considering what should be the next steps on this. But let me reiterate what I started with. It's safety was, is, and will always be of paramount importance for us, and we continue to optimize our procedures and our process in order to move forward. That has Indigo actually always been doing, and we keep doing that with actually the same procedure as other airlines in the world. Always look for a continuous improvement of safety.
Thank you. And if I may squeeze one more, on your international capacity additions, you were looking at 30% of your ASK mix in terms of international ASK by end of FY24. Does that remain same, or how is that placed right now?
Well, it remains the same. Again, we keep our capacity guidance. Some of the international flights, of course, depend on slots and exact availability. So I think earlier we said we have in the next 2 years that percentage going up. We take a very significant step now with the capacity additions. There's, again, a bit of uncertainties around bilaterals, what are the traffic rights available, what are the precise slots available. So I think the precise percentage cannot be sort of put firm. What can be put firm is that it's just a priority for us, and we're not only adding new destinations as the one I've just shared with you, these 6, but also a lot of new routes. Recently, I think Doha, Abu Dhabi was announced. We also start flights from Ahmedabad to Abu Dhabi. So we keep expanding the network, and actually we have added a couple of dozens of new international routes over the past couple of months.
The next question is from the line of Aditya Mongia from Kotak Securities. Please go ahead.
Thank you everyone for the opportunity. My first question was focused more on international. I wanted to get a sense of the quarter gone by and what has been your market share in international. Essentially trying to kind of gauge how big has been Europe for you in recent times post the code share.
Well, international market share is always a bit of a more difficult story. Do we look at what international do we look at? Total international. Then do we only look at the share we have as compared to the other international airlines, or do we just look at the domestic airlines? So if we take all flights in and out, India, we're in the range of 15 to 16% of market share, which is a mixture of international and Indian airlines. That's our share there. And as we know, the Indian carriers have a somewhat lower share than the international carriers when it comes to traffic to and from India. That's precisely why we believe there's such an opportunity to grow that share and making sure that we get a bigger share of that pie. So that confirms our ambition and our strategy to grow faster on the international side. Your specific question to Europe, today we only have the 2 wide bodies flying into Istanbul and from there connecting to an impressive 34 European destinations and 4 to the US. What's very, very encouraging actually is that this is working very well, and we see actually a very strong appetite Indian market to move there. And it's also helping actually to build India more and more as a global aviation hub. So if you look at the connection, let's say Amritsar to Hamburg, we fantastically have an opportunity to fly Amritsar, Delhi, Istanbul, and then Istanbul on the codeshare to Hamburg. And so that customer is flying Amritsar to Delhi with Indigo, Delhi to Istanbul with Indigo, and the last mile, so to speak, is on the codeshare flight with Turkish. So we have our strong domestic network, which today 78 and soon 79 domestic destinations, which are connecting through our various hubs in the country to international. Well, today again, 1 flight out of Delhi to Istanbul, 1 flight out of Mumbai, but clearly it's a strong opportunity to start preparing when the XLRs are coming in later and to create a stronger awareness to that market. The 4 recent US code shares which I announced, which I mentioned earlier in the introduction, are also actually doing very well on the routes to Istanbul and connecting there to these 4 US destinations.
Understood. And maybe a repeat of a question that I asked last time around. Is international to international in any form taking shape, given the successes that you're getting in domestic to international at this point of time?
Oh yes, absolutely. And with the expansion, since you had the question last time, but with the expansion of our both domestic and international network, we can see more opportunities. And with the cooperation, we're working in some of the airports measures to expand capacity, to make sure that the airports are more suitable for international customers. There's a good opportunity. Again, our launch, for example, of Mumbai Jakarta is also connecting to some other flights coming from Southeast Asia into Mumbai, and as such, again, building India into a global aviation hub.
Understood. And not a question, but just a clarification. In the initial remarks, you talked about numbers of 200 routes and 550 routes. Are these single operator routes that Indigo is flying at this point of time, or were you referring to some other statistic?
Yeah, no, I will answer your question. By the way, I noticed that no one sticked to the guidance of having one question each, but I'll be happy to elucidate on this one. When I was mentioning the number of routes, these are direct routes being operated. Of course, in the number of city pairs which we sell with 1 or 2 connections, it's much more. So we used to have a situation prior to COVID where we had in the range of 350-ish different routes, and every sort of Ahmedabad to Calcutta is a route, and Delhi to Dubai is a route, and so on. So we had it at that point in time. We had like 80 destinations and 350 routes. Today, we're in the range of having 110 destinations and an impressive 500 routes. And I think why this is important, it shows that we're not only adding new destinations, and by adding new destinations, adding new opportunities for our customers, but we're also building on connections between existing destinations. The example I just gave for Abu Dhabi is, I think it's a good one, where in fact we're now also connecting Goa and Ahmedabad to Abu Dhabi. So Abu Dhabi in itself is not a new destination, but the new routes which we're launching are creating for our customers direct opportunities to fly between these two cities.
Thank you, Mr. Munga. Request to join the queue for any follow-up. The next question is from the line of Pulkit Patni from Goldman Sachs. Please go ahead.
Sir, thank you for taking my questions. One is just a bookkeeping question. The second one, in your guidance of this 25% capacity increase in second quarter, how many plane additions have you factored in?
Can we get back to you on that one? I'll get back to you on that one.
Okay, Gaurav. Gaurav, one quick question, just for my model purpose. How much accumulated tax losses do you have so that we know which year you start paying taxes from or account taxes from?
Somewhere in the range of 16,000 crores.
Okay. Right. So not for the next 7-8 quarters at least. Thank you.
Thank you. The next question is from the line of Kushagra from Old Bridge Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just one, on your capital allocation again, is there a threshold or a number which you are working of free cash as a percentage of your revenues? And hence the drawdowns from the cash balance could be limited to the tune of 3,000 crores, or there is no such limit of free cash as a percentage of revenues and the drawdowns can be a little higher as well? Just a perspective on that.
No, we haven't defined any cap right now. We're looking at guidances from other airlines also in terms of what's going to be the best safety net that we want to carry as we scale up our operations. So this is a moving number right now, but there's sufficient available capital to deploy on the strategy we kind of shared with you in areas of assets as well as infrastructure builds as well as digital as well as talent.
Sure, thanks. Thanks and all the best.
Thank you. The next question is from the line of Joseph George from IIFL. Please go ahead.
Thank you for the opportunity. My question is on your comment about assessing the possibility of buying aircraft and other assets. So if you recall, I think back in 2017, you had adopted this position of buying physical assets. But I think 1 or 2 years down the line, when things weren't going too well, you shelved that strategy, and now we are back on that same path. So what I wanted to understand is, what are the factors that have led you to go on that path and then, call it off and again go on that path? And a related question is, if it is purely the fact that the cash flow generation has been extremely strong, the cash on the books is very strong, have you considered paying dividend to shareholders?
So if you compare to 2017-18 when we were buying assets, that was again largely because we were accumulating cash through performances. But unfortunately, when COVID happened, we had to change courses, and as a result, we had to offload those assets that we had bought on our books. Again, the circumstances have started to improve. Like you've seen, the last 3 quarters have given us positive outcomes, both in terms of profitability as well as cash generation. As a result, we are going back to that similar philosophy of allocating capital towards acquisition of these assets that we've done in the past. As far as dividend is concerned, yes, we are working towards that as we come into a positive net worth territory. That will be the time that we'll again look at dividend as an option also, which used to be pre-pandemic when we had a positive net worth.
Got it.
It's a precondition requirement. The condition for, again, dividend is that you need to have positive net worth. And we are aggressively working towards coming back to a positive situation.
Sure. Thanks.
Thank you. The next question is from the line of Ankur Sharma from HDFC Life. Please go ahead.
Yeah. Hi. Good evening. Just one question, again on the yields, where you kind of refer to a 15% kind of a fall, as we get into Q2. So just kind of putting it in context, given the fact that, the industry is capacity constrained, given all the issues, with some of your competitors, plus the Pratt& Whitney engine issues. So, I'm just struggling to understand why should yields come off so much, in an environment when also crude is going up. So wouldn't you, kind of try and protect your margins and maybe try and hold yields up? So I'm just trying to understand why yields should be down so much. Or is it that demand kind of slowing down and therefore we kind of pricing, going down as well? Is that also one of the reasons why you're seeing this?
Usually Q2 is a very seasonally weak quarter because you're coming off a very strong Q1, which is again largely because of the holiday seasons as well as now festivities that have moved from Q2 into Q1. Q2 traditionally is always a seasonally weak quarter. As a result, the demand goes down significantly, and that invariably has an impact on your yields also. So that's what's the biggest driver of yields coming off if you compare it with Q1. Again, Q1 was a very strong yield quarter, and when you compare between Q1 and the Q2, that's where the dip is even further aggravated here.
Okay, but even on a YOY basis, it seems like a similar, almost like a mid-teen kind of a drop, right? So even on a YOY basis, it seems like a fairly significant fall.
Yes, it is. Again, two elements that you'll see if you look at YOY, you look at the load factors. The load factors will probably be in the 70s. This time around, what we mentioned is that we are trying to at least stimulate demand so that the load factors still hold up, while the yields are turning out to be softer than what traditionally has been the dip between a Q1 to a Q2. So it's a combination of both that you'll probably have to look at, both load factors as well as yields put together. So our objective is, as we've communicated in the past, is to maximize revenue. So a combination of that is where we are playing out Q2 for ourselves.
Thank you. Next question is from the line of Venkatesh Balasubramaniam from Axis Capital. Please go ahead.
Yeah, I had a couple of follow-up queries. Now, the new planes which you are getting from Airbus, are they all the CFM LEAP engines, or you are still taking engines from Pratt & Whitney, the GTF engines?
Simple answer, all CFM engines.
Okay. Now, if these are CFM engines, earlier you were using the Pratt & Whitney engine. In the CEOs also, you were using the Pratt & Whitney engines in the NEO also. The new Pratt & Whitney engines were supposed to be 15% more fuel efficient. And I assume that was the reason why people were opting for that engine. Now, how does the fuel efficiency of the CFM engine compare with the GTF engine of Pratt & Whitney?
So they're at par in terms of between the new CEO from new Neos from Pratt & Whitney and the LEAP. They're at par in terms of their fuel performance. There could be a marginal kind of a difference, but you can consider them to be at par.
Thank you. The next question is from the line of Achal Kumar from HSBC. Please go ahead.
Yeah, hi. Thanks for another opportunity. I had two actually. So one, on the international side, so whatever strategy you're adopting now, you're flying 2 777s and all. So is it a kind of a bridge to until the time you start receiving your A321XLRs, or is it a kind of a permanent strategy you will continue despite even after you start receiving A321XLRs? I mean, how should we look at the international strategy once you start receiving A321XLRs, if you can give us a bit of a color? And my second question is about the yield. I mean, I think, again, there's a lot of uncertainty about Go First, but then the government has given clearance. So how do you see the yield impact? I mean, or in the simple terms, what kind of impact, positive impact you had on your yield due to the disappearance of Go Air, and now if you go fly again, what kind of impact do you see on the yields? Thank you.
Yeah. Maybe let me start with your first question on internationalization. Clearly, Indigo, since we started to operate international, we have gradually built it. And today, as we shared before, we're moving from something in the low 20s towards 30% of all our ASK international. The geographical position of India ensures that we actually, in the present range aircraft, already can do a lot of international flying, which we are doing by adding new frequencies, new routes, and so on and so forth. The next step clearly of that is the XLR. It's not precisely clear yet when we will have the XLR, neither is it precisely clear what's going to be the exact range. What is clear though is that it will bring us to Europe and that it will bring us further into Asia. And that means that our present wide body, of course, which was born out of the necessity for additional capacity because of the supply chain challenges, but in fact is helping us very much to prepare for that next stage, that the moment we have these XLRs coming in and we can fly to places like Athens and Rome and Seoul, that means that at that point in time we also have the opportunity, in fact, to already have some of these flights in code share as we do have them today with Turkish, not so much Seoul obviously, but places like Athens and Rome we have in place already. So our strategy clearly is to build on that and to make sure that we can continue to grow that international piece of our business. When your effect on the yield, I mean, it's difficult to precisely say what's the exact impact. What we can say though, and I think that's a number which is relevant, is that a relatively limited number, anywhere in the range of 15%, depending a bit whether you look at flights or at precise capacity, in the range of 15% of our routes was overlapping with Go First. And all the other routes did not have any Go First flights. So that means that the actual impact on that is limited to that. Yes, there has been some effects, and yes, when suddenly some capacity is disrupted in the market, there is some market disruptions. I think we've all seen that and we've all witnessed that. But overall, again, looking at the scope of our network and the 500-ish routes we're having, a relatively small number, I mentioned 15%, again, depending a little bit what parameter you use, 15 to 20% was having an overlap from Go First on these specific routes.
Thank you. Ladies and gentlemen, that would be our last question for today. I now hand the conference over to Mr. Peter for closing comments. Thank you, and over to you, Peter.
Thank you so much. I will not repeat everything what I said at the beginning, but maybe just by closing, expressing our gratitude to all our loyal customers and dedicated Indigo colleagues for the progress we have made towards this wonderful results in the third consecutive quarter of profits, and by the execution and implementing of our new growth strategy towards new heights and across new frontiers. Ladies and gentlemen, thank you very much for your attention, and looking forward to talking to you next quarter.
Thank you very much. Ladies and gentlemen, on behalf of Indigo, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.